coming out. A few of you got the message. We really try to get the word out, but it's really important. And we know this is an important topic for homeowners in Marin, and I think we're going to have a really good conversation. We do have some 3x5 cards in the back, and if you would like to ask a question, we'll go ahead and use the cards, and I will read them out. And we could do that right along, it's fine. So I'd like to go ahead and first do a quick introduction. I'm Rachel Kurtz. I'm the NRG coordinator for Central Marin. And I also like to introduce Miranda Miller, who is the coordinator for Ross Valley. And so we're really excited to be here. We focus a lot on emergency preparedness work, but we also know that many of our homeowners are very concerned about insurance and the risk with wildfire. So I'm going to go down the line, and we'll start with Emily. And I just would like to do just names, and as more people are going to be coming in a few minutes, so just name in 2 words that you think about that come to your mind when wildfire and insurance. What are your 2 words here?
All right, so I'm Emily Rogan. I'm the Senior Program Officer for United PolicyHolders, which is a nonprofit organization that helps people before and after disasters. So when I think of wildfires and insurance, that's kind of our bread and butter. So I could choose bread and butter, or I could choose never boring.
Great. Kate Mata.
Hi, I'm Kate Mata.
I think you need to talk a lot louder than you think you are talking.
Oh, okay. Is that all right? I will
Not saying anything, but they can't hear you.
Are the mics
Can
on?
everyone hear me?
These mics tend to work better when your mouth is very close to the mic.
All right.
Well, thank you.
Okay. All right, Kate.
Hi, I'm Kate Mata. I'm here with my husband, Mark, and we are fire survivors from the Tubbs Fire in Santa Rosa in 2017. And 2 words when I think about insurance from more of a layman's point of view, I think of confusing and impersonal.
And I'd also like to introduce that Kate Mata is daughter of Lee and John Howard, who are founders of our NRG communities, so in Central Marin, so thank you.
You feel like you know you are.
I don't think this microphone's on. Hello, test 1, 2. It's on. Okay. My name is Eric Henerlau. I'm an Anixter Oser. We are an independent insurance agency here in Marin County. We do homeowners insurance as well as many other kinds of insurance. And if you want my 2 words for insurance right now, extremely constricted.
All right, Mark.
Good evening, my name is Mark Brown, the Executive Officer for the Marin Wildfire Prevention Authority, and my 2 words would be looming crisis.
Okay, on that happy note, thanks. Joel.
I'm Joel Gumbiner. I'm a lawyer. I'm in San Rafael. Williams & Gumbiner is the firm. I've represented insureds in disputes with insurance companies for 40 years. Went to my 40-year law school reunion on Saturday. That was very fun. But my practice is strictly representing insureds, commercial homeowners, almost all property insurance. And because of the nature of what I do, I'm only seeing the claims that have gone bad or the coverages that aren't there. So, and as of late, I would say the 2 words are not good. Not good.
So on all that happy note, what we'll do, I have some questions that I'm going to ask everyone, but then most of our evening will be for you to have an opportunity to ask questions. Because it's really important that we make sure that you're getting the information that you need, because we are in a situation right now. I think everyone is aware that in California, many of the insurance providers have made a statement that they're not reinsuring or not providing insurance. So I'm going to go ahead, and I think we'll need some explanation as we're going through, but also just in terms of the questions. So I'm going to start with Emily. What do you need to know about insuring your home with the FAIR plan? And maybe that needs a little bit of description of what the FAIR plan is and why we're talking about it.
All right, thank you so much, and feel free to give me a nudge if you want someone else to jump in too. So can I see a show of hands from the audience if you are currently with the FAIR plan or know about the FAIR plan? No? One? Couple? Okay, great. So the California FAIR plan is California's insurer of last resort. So if you cannot find insurance through the traditional market, so State Farm, right, USAA, if these Allstate, if these companies are not offering insurance in California, if they're not writing new policies, then there are different tiers of insurance that you can get. So those are all, we call them kind of like name brand insurance companies. You know their name. If they won't write policies in California, if you get dropped by your insurance company and you have to shop for new insurance, then you have different options. You have the traditional market, you have non-admitted insurance companies, which I'm so glad there is an independent agent here, because really those independent agents are going to be your access point to the non-admitted market and maybe ultimately the fair plan. So the fair plan is the insurer of last resort. So if you cannot find insurance, if no insurance company will write you insurance in the state of California, the fair plan is required to offer you insurance, right? There is this backstop for homeowners in California. So we are lucky to have that. It doesn't always feel lucky because it can be really expensive. But as I said, we're a national organization. We work after many different disasters. And there was a Marshall Fire in Boulder, Colorado, almost 2 years ago. And so in the state of California, in Colorado, they are now just feeling kind of what we're feeling now, right? Prices for home insurance are going up. Some insurance companies are dropping people, and they are just passing legislation. So the legislation's passed, and now they have about a year to develop a company like that. We're lucky to have that in California. It's not perfect by any means, and the purpose of the FAIR Plan is to be this backstop, and then hopefully allow you some breathing area so that in a year or maybe two, you can shop around again. The independent insurance agents are really doing a lot of hard work to figure out who's opening up. It's a dynamic marketplace. Who might be offering new coverage? What new insurance companies are coming in? Maybe we don't know about them, but they're vetting them, right? And so your goal is to get out of the FAIR Plan, but it is this backstop for California homeowners.
Great, thank you. And I'll
Can I jump in on that?
Yes, please.
It's very amazing and encouraging that none of you have a FAIR Plan yet. Maybe Eric could speak to this, because my impression was more and more people were going to have to go there. FAIR is an acronym. It's not an English word. It's a collection of insurance companies. Insurance companies are mandated to pool their money and create this plan. So it's kind of it's treated as an insurance company, but it isn't really an insurance company. It's the amalgamation of a bunch of companies by the amount of market share they have. And the policies are changing, and so if you're relegated to the FAIR Plan, as if you can't get insurance anywhere, the FAIR Plan policy is becoming very restrictive and narrow. It's not going to be the same coverage that you had with State Farm or with Travelers or something. So Emily's group, United PolicyHolders, tracks this very carefully, and we've seen the policy for just coming out this year that'll be in place for next year's fires, and it's a little more difficult. So, and it's a difficult company to deal with. So you'll have it, and it will be there to provide basic coverage, but it's not going to be exactly the same as what you have with your current company. So hopefully none of you have to go there. That would be good.
And so I'll toss that sort of same question or same theme to Eric. So you're going to save the day.
I'm not sure I'm going to save the day, but is it still on? You hear me okay?
Yeah.
So I'm going to add on to that. If you're not in the FAIR Plan, well, first of all, if you have insurance with a regular admitted carrier, she said, stay with it. Don't miss a payment on anything. Don't ever lapse on anything, because if you lapse, they will never reinstate you. Not the point right now. So the FAIR Plan is insurance of last resort, as Joel mentioned, and is very limited in coverage. It only provides coverage for fire and vandalism or malicious mischief. And those are the only three things it covers.
Say that again, fire.
Fire, vandalism, and malicious mischief, which is vandalism, okay? So fire and vandalism, that's it. Your homeowner policy covers a million things, and the FAIR Plan only covers two things. So really, if you got a FAIR Plan policy, you would have to get another companion policy to go with it to round out a complete homeowner policy. So you're really buying two policies to make up the difference. So going back to Rachel just said, am I going to save the day? No, I'm not going to save the day, but we will do the best we can to find insurance that's available out there. So the two real big questions right now out there for everybody is availability and price, right? Can I get it? Is it available? That's the first question. And if you can, what's it going to cost? And as we mentioned, the fair plan is available for almost everybody. There are a few cases where it's not available, but unless you're pretty bad, it's going to be available for you. So you'll have that, and it's not going to be cheap. It's not going to be cheap. I just did a quote for a house up on Chapman Park, North Chapman Park, right behind here. Hill here. 1.2 million coverage for the house, $300,000 for personal property. The fair plan coverage alone is $8,200, $8,200. Then they have to get another companion policy that probably costs between $2,000 and $3,000 on top of it. So that's the kind of numbers we're talking about. So going back a couple of years, I've been in the insurance business a long time, and we didn't write fair plan policies ever until like 2 or 3 years ago because there was no need to. Everybody would write policies somewhere. And 2 or 3 years ago, when the insurance market started drying up, it started becoming more constricted, we started writing more and more fair plan policies. Now, all we spend our time doing is dealing with triage every day. Who's getting canceled, who we have to replace, and right now, because everybody's dried up, we're going to write everything with a fair plan. Almost everything. There are a few exceptions. Companies in the independent world are still writing. We have Hartford, Mercury, and Safeco, but they're very restrictive. They won't write anything in this area, nothing in Marin County, only out in places where there's no trees around, right? So no wildfires. Other than that, there's no possibility. If anybody here in Marin County came to me today for insurance for their home, 99% chance I can put in the fair today.
Okay, moving on. So Kate, you went through a horrendous experience, losing your house in the Tubbs fire. Thank you for being here and sharing what you've had to go through, I'm sure personally as well as professionally, but also related to the insurance. And it was not an easy process for you, and I was wondering if you could provide a little bit of background and what would you say to somebody who lives in this area today, hearing what we're hearing around the fair plan and the problems getting insurance? What do we need to do as homeowners?
Sure. So one of the things that I think that my husband and I had always taken for granted is you buy a house, you get your quote for insurance, your mortgage banker accepts it, and you're good to go. And we never really understood the fine print in our policy because we'd had multiple homes and never had to dig in and look at it. After the fire, we were lucky enough that there were some legal firms up in Santa Rosa that were offering free policy reviews. So we sat down with them and set up an Excel spreadsheet that really dug into each of the separate sections that are on your declarations page, and then all the fine print that's in the 50 pages afterward and exactly what that means. So as not fun as it is, understanding what your policy says now, if you have still your safe insurance and not the fair plan, but then being able to understand what the nuances of each section are and that you are actually insured to be able to afford to rebuild. We purchased our home up there 14 months before the fire, and we were still underinsured. So the algorithms that are used nationally don't actually always apply to the cost per square foot to rebuild in the Bay Area. So really digging in on what you have now, and then also digging in if you go with one of the alternative insurance plans, whether you have to buy 1 or 2 policies, just to make sure that the money that you're spending is actually going to cover the rebuild for your home.
It's a lot. Who's read their home insurance policy recently? Right? Yeah. So Mark, question for you. So we're doing all this work with Marin Wildfire Prevention Authority, Fire Safe Marin. Is it helping insurance? Does it matter, the risk reduction that we're doing? And so can you tell us a little bit what's happening statewide, locally, and where are we going with this work that we're doing?
Well, I was going to try to hold it because it's a little bit easier than bending over, but nudge me if I'm not being loud enough. So let's start at the bigger scale. Let's talk about what we're looking at it as a fire service in partnership with the insurance industry to make sure that our homeowners can continue to be insured. First of all, we need to understand whether we agree with it or not, the insurance companies are protecting their investment. That's what they're doing. So we need to find a way to help the insurance companies protect their investment, which means decrease their annual average loss. To do that, we have to identify what is causing the problem. We have done a tremendous amount of research. If there's one benefit from all the homes that have been destroyed from wildfire, is that we have tens of thousands of homes to tell us what went wrong. We also, remarkably enough, we have a lot of homes that show us what went right. I think you see that one home a lot in Maui. There's also research that we've been doing, including having a lab big enough to build an entire house in and then burn that house down and identify what is burning that house down. And what we're learning is there's three main ways that fire burns. Vegetation to vegetation. When it comes to homeowners insurance, and our insurance companies don't care about that one. Vegetation to homes, you care about that one. And then the last vector is home to home. Homes starting the other homes on fire. The ones that are very important for us are the two vectors, vegetation to home, which probably took out my panelist partner here. Her home, was probably, knowing where it was from vegetation to homes. Then when it got a little bit downwind from her place, it was home to home ignition. And so a little bit of different scenario or how we have to deal with that. But the key thing that we're really trying to work on is everyone wants to stand at their home and point at the wildland and say, there's the problem, it's the wildlands that are burning our homes down. But the reality is we're trying to get our homeowners to turn around and look at their home and identify what they can do to make their home less ignitable. Compliance with what we're asking residents to do within our home inspection program is one of the hardest things to do. And let me describe our home inspection program real quick. We have $4.2 million a year in Marin of funding going towards our home inspection program. The MWPA is not the inspection agency. It's your local fire departments that have the jurisdictional authority and are the ones that own the inspection, own the responsibility to do those inspections. And so when you have an inspector come to your property, they are an employee of that fire department. MWPA provides the funding and provides the mechanism in which their data is going into. And I know that there's, when we talk data of home inspections and insurance, this question comes up almost in every forum. In fact, it's already come up this morning, or this evening. How secure is our data? So our software inspections is a software as a service. And built into our contract with the software provider is the highest levels of security. They are Amazon Cloud type securities. They are the industry standard. We also have a data security policy that says NWPA and the member agencies own that data and it will not be shared with anybody without the express consent of the homeowner. And I'll look at my insurance partner here. To be quite frank with you, the insurance companies are not interested in the data that we come up with. They have their own data collection. They're interested in the data they collect. However, there can be advantages for you as a resident who've done great work around your property to share that data, but it would not be shared with the insurance industry itself. There's a program called the Wildfire Prepared Home Designation with the Insurance Institute for Business and Home Safety. We do have an agreement with them that if you authorize the release of the data, it will go to IBHS for possible approval for Wildfire Prepared Home designation. Then if you get that designation, you can go to your insurance provider for a discount. It also will help with assurance of non-renewals. The other benefit, or the other thing that is going on is the California Department of Insurance has set up Safer from Wildfire guidelines. And there's 10 items on that list that if you have any of those 10 items on that list, once the new rates are being approved, which CDI is going through the rate approval process now, if you have any of those 10 items, the insurance companies must give you a discount. I'll give you an example. A non-wood closure to your home of your fence, so like a metal gate or a non-wood gate, non-combustible gate, is one of the items. Gutter guards, vents, those types of items are things that can give you a discount. So in our inspection program, we are identifying those both positively and negatively. So that way, if you have 6 of the 10 items, we can actually notify you, hey, you have 6 of these 10 items and afford you a discount. Will it help you maintain insurance? Possibly. Again, the insurance companies are much more concerned about their data rather than our data. But what we are trying to do is develop a home inspection program and a process that shows that we are meeting their standards. And then as they collect their data, how they ever do it, I know that people think that, and this might be very true, that drones are flying and collecting data, but the vast majority of their data collection is actually through artificial intelligence, at least from what I see. But what we want to show is that we as a community are coming together, because the strength of the community is some of its parts. And if each homeowner is doing their part, then we start becoming stronger. But it's much bigger than that. And I'll be one last statement. I know you want me to move on. In the scope of the insurance world, Marin is small. They need to show we as California need to show many more communities that are doing the level of effort that we are doing here in Marin throughout the state, because they need geographical diversification so that they know that, well, that maybe they lost their profits in Marin. Let's turn this around. They lost their profits in another county. They need to know that they're going to be able to keep their profits in Marin. They need that geographical diversification in order to do that. So we have been working closely with our legislators on how we can craft different initiatives to help promote this level of effort. And to give you an example of this level of effort, we have a grant program. For every dollar that the NWPA has been putting into the grant program, our residents have been putting $6.50. So just in the last 3 months, our residents have put $3.2 million towards making their homes safer. Those are just the residents who have applied for grants. That doesn't include the residents who are doing work on their own without grants. So we need to amplify this throughout the state in order for the insurance companies to feel like they can continue to invest in California.
Thank you. I'm going to pose the next question to Emily with United Policyholders. If you have because you have a perspective of what's happening at the state level and legislation. I mean, we as individuals and in a small county, what are we going to do? We're going to go up against insurance. How does that, what's happening? And I have heard the term, it's a cat and mouse game right now. And maybe can you describe what that means in terms of cat and mouse game?
Yeah, thank you. So first of all, I think it's incredible what you had just said about how much Marin is putting into their defensible space to harden their homes. The fact that there is money to help people, it's really exemplary. And I just want everyone to just feel proud that Marin is kind of taking a lead in the state around these efforts. There are a few pockets, but in Northern California, you got Marin, in Southern California, Ventura County, and San Diego, and really they're working together to just see how these programs are working. It's just a really incredible thing. So, I'm glad that you're here. I'm glad to be on this panel with you. In terms of what's happening, with in the higher ups, right? So there's a lot of negotiation happening. There are a very strong insurance lobby, and part of the reason why I'm really happy also to have an insurance agent who's independent on the panel instead of perhaps a lobbyist is because you can give a straight answer, right? And not just the company line. And what we're seeing is the more efforts that communities are doing gives your state legislators more concrete examples of why the insurance companies should be coming back and writing insurance here and being able to connect those dots. It gives them more power to be able to pull that. And the insurance companies, they want higher rates. They want to be able to set their rates for whatever they want. But we're lucky in California that we do have our Department of Insurance that will approve them. They have to go through, they have to approve those rates. You had mentioned earlier the Safer from Wildfires, which is really wonderful because what it says is that all the insurance companies in the beginning of the year had to weave in discounts for home hardening and defensible space, right? They had to weave in these discounts for these standards that were set. And the California Fair Plan is the only one that has gotten approval for that discount for their rate filing. More will trickle in. So any of the work that you're doing right now is going to have, you'll be closer in that checklist. If you have to do these 10 things to get the discount, as you do bit by bit, when we see what your insurance company will offer as a discount, you'll be that much closer, right? And you'll know where the finish line is to get to for them to weave that in. So we have, we have a state bill right now that has been introduced that will require insurance companies that, if a community, does, or if a person hardens their home to this extent and does, these things to improve their home chances, then they should be one of the first to be pulled out of the fair plan and given a rate in a traditional market. That's one of the bills that's happening. The Department of Insurance, they're also enforcing the non-renewal moratoriums that have been really helpful. So we only have 2 left, luckily, because we haven't had a busy wildfire season. But when there's a wildfire, what it does is it protects the adjacent zip codes from being dropped like that, right? So if there's a wildfire in your zip code 94505, so 94505, then all the surrounding zip codes will get 1 year of relief before being dropped. So it's trying to just cool insurance companies' fast reactions to really pull out of a place. So there are things that are helpful that are happening, and the more our organization can collect data on what's happening in your area, the more we can help give the state legislators more data and more examples of communities that are doing work and seeing how they can, your community can receive a benefit from the work that you're doing.
Thank you. So Kate, let me ask you, so the next morning, now we know we're supposed to read our policy, right? The next morning after the fire and you had to realize, what do we do now? What do you do? What were your steps that, and you were in a position that you had a home, you knew you had insurance, and still can you share some of the problems that you faced in working with the insurance? The reality, how long do we have?
So interestingly, probably, and Emily and I were just talking about this a little bit before, the night of the fire, you are in a fleeing situation. And so your first priorities are your people, your pets, safe, do you have a place to sleep, you're calling your family to let them know that you're okay. So, securing yourself space. The next morning you wake up and you think, okay, I guess the first thing I need to do is call my insurance company, and then it becomes a waiting game. I am a very organized person who thought, okay, I'm just going to jump in here and get this sorted, and we're going to get the insurance thing going. Thankfully, United PolicyHolders came in to Santa Rosa in force, and we're just really helping people understand what the process was. And we were laughing before because, as Emily said, some people want to take things very slowly, bite by bite, and there's other people who want to know the whole big picture. And I told her just a few minutes ago, I sat in one of their first meetings, and a woman from Southern California was presenting, and she said very nicely and calmly, and we're back together and have our house rebuilt, 3 or 4 years later. And I thought, what, 3 or 4 years? And that is what it takes. So beginning to get back to Rachel's question, just breaking down what you need to do. So get your insurance claim going. Do not sign anything. Break down your policy. Understand what you are entitled to in your policy. Any advice, we got a little, they would send us our, living expenses, a chunk of that money. We had listened to United Policyholders, and we looked at the check when we got it, and the check was marked dwelling. They hadn't even, we weren't even allowed to get back to our property for, say, like 2 months because we were in a rural area. So we had to send that check back and say, no, we're not cashing a check that says anything about the dwelling on it until we have a financial agreement. So just being calm, getting organized, trying to break down the information that you have that you're entitled to in your policy and documenting everything. So that's kind of a big sweeping answer there, but we could go into a lot more.
Joel, do you have any other guidance on that? Because you deal with when the claims are not being paid by the insurance. And I'm sure that you've had some of the folks from the fires probably having to address. Any other guidance that you would provide?
Well, yeah, there's represented a lot of people, and I think, one thing is, I don't know if any of you are aware of public adjusters and what they do, public insurance adjusters. But the process that any fire victim goes through is, it's what we'll talk about, is just, it's lengthy, it's time consuming, and it's absolutely impossible for some people to do. It's just, they don't have the capacity emotionally or organizationally. And so when you're asked to put your inventory of everything you own together, and you've got to get a construction estimate of the cost to rebuild your house, many of you are very capable or actually in the business, know how to do that, have friends, have relatives in the business. That'll help. But you're not in your right frame of mind. You've lost your home, you've lost everything, and people are just impaired. And so public insurance adjusters are adjusters who do the same thing company adjusters do, but they do it for you. So they work for the public. And they have a bad reputation in some places because there's propaganda campaign out against them. If you know any or you met them, the service is invaluable. And Emily can talk about that. She and I both work with them closely. So a lot of the work I do comes from public insurance adjusters who 90+% of the time will get your claim resolved faster than you probably can. There's a cost, but it's worth it. And I think the amount of money they get, the insurance companies do not come in, they're not your friend, and they're not coming in to pay you as much as they can or as much as you're entitled to. Especially a problem in California because they'll bring in adjusters in the emergencies from all over the country. California, construction costs are higher than anywhere, and this isn't understood. And the database that's used by all the insurance companies, the Exactimate database, supposedly broken down by region. It supposedly has regional data, but the entire database is made up of information that's fed into the computer from adjusters on the insurance company side and how they settle claims. It's okay in some areas, it's very, very bad in other areas. So if it happens to you, you're going to need help. And you're going to, I think public adjuster is something to seriously consider, talk to several of them, meet them, find out what they do. But they will hire the experts, they'll get the construction people on board, get estimates pretty quickly that will be fair. You'll know you can rely on them because they're trying to maximize the benefits you're entitled to. And you'll see invariably in every case, the estimate you'll get from a contractor or a public adjuster to rebuild the house the way it was, which is what you're entitled to, will be orders of magnitude higher than the insurance company's estimate. Many times the insurance company is adjusters who came out of college and got trained in software, and they're putting your estimate together to rebuild your Marin house. And they don't have any idea how to build a house. Builders know how to build houses. And there are, there's specific things about all rebuilds that adjusters on the insurance company side and their software don't appreciate. So get help. Now the inventory of your contents, where everything's gone, and your inventory, if you really could inventory everything you own, all your furniture, all your clothes, all your jewelry, all your belongings, it's thousands of items probably in the average house. And trying to put that together is really hard. And when you're living that in the aftermath of a fire, it's emotionally draining, it's devastating, I've seen people in pure paralysis, month after month, year after year, trying to put an inventory together, and their brain's saying you're forgetting stuff, and you are. You'll never remember it all. But public adjusters and consultants they hire have experts who can help price it, help you remember what you have. They've got tools to do that. So my best advice is get help, not from a lawyer. I don't like to get involved in claims. I won't do claims. I'm not a claims adjuster. So I'll be involved when there's a coverage issue or there's just a real, just dug-in insurance company that won't move and won't pay the claim fairly, no matter how much negotiation, no matter how much proof is presented to it. And that's when you'll need to get to a lawyer. That's relatively few cases. Most cases can be resolved with the help you get. But don't wait for your insurance company to put the estimate together, tell you how much you're entitled to, tell you how much your house was worth, tell you how much your contents were worth. They'll try to get you probably into you're entitled to additional living expenses. You're entitled to a living situation that's comparable to the one you lost. So if you were living in a 3,000 square foot or 2,500 square foot home in Marin, and now they're going to rent one for you, you're entitled to a 2,500 square foot house in Marin, or something comparable. Don't try to do them any favors by going and living in your rental property. So you save them money. I see this all the time. I thought it'd be nice to do them a favor. We're going to move into our rental property, and they'll be really happy that we're saving them all that money. Meanwhile, you're losing the income on the rental property, and it's, they'd be thrilled with that. If you move in with your brother-in-law, they're thrilled with that too. But you're entitled to what you incur in living expenses, and you're entitled to have the insurance company for it. And they'll pay for it. And they may push back a little bit, but on that one, if you assert your rights and say I'm entitled to the comparable house I had until mine is fixed, generally they're going to pay for that and not too much pushback. But of course they're happy if you'll do something less. But what I see is people thinking that will ingratiate them with the company or provide an easier time on the dwelling measurement or the contents measurement, and it won't. So get what you're entitled to, know what you're entitled to, and get help.
Great, I think Emily has a follow-up to this.
Yeah, so after hearing how awful an insurance claim can be, doesn't it make you just want to trim a few trees and mow your lawn and get that gate between the metal gate? It's a very difficult process. Kate said it's a very difficult process. Joel sees it, the insurance claims when they just won't budge. There's a lot of wiggle room, but these are the conversations that you'll want to have, with the people that you live with now before something happens. Would we want to? Do we have the time, the space? Do you have a full-time job? Do you have children or parents that you're taking care of? Do you have the space to, in your life, to do this, to take on that full-time job if something were to happen in your home and burn all the way to the ground? There are professionals that you can hire, but just like nonprofits, construction companies, public adjusters, attorneys, all of them, there are good quality folks, and there are people who are not as great. Checking references is so important, but it's also important to know about that these professionals exist. Many people don't even know public adjusters exist until someone's trying to get your attention so that you can hire. So just having that knowledge base now really makes the difference. And then also, when you're having those conversations of would we be able to do that, would you be able to rebuild? Would you be able to do a big construction project? Is that something that you'd want to do? We've been able to, since Kate's fire, we've been able to help pass laws that say that you're in California, you're entitled to take the money that you would have used to rebuild and buy elsewhere. So that's something that's a law that's been in place, but we also were able to clarify that, and they can't deduct your land value, which was this gray area that was causing people a lot of trouble, and that they wouldn't be able to move forward because their insurance company was trying to hold something back. And so, you have options. We're lucky. We were able to change the law that says you have 3 years to use your additional living expense coverage, like Joel mentioned. So now we have 3 years. But going back to what everyone was saying, check your policy, because if you only have, say, $100,000 of additional living expense coverage, how long can you stretch that if you still want to maintain your standard of living? So checking if you have that dollar amount is a really important thing, because in Marin, in the Bay Area, especially in a time where a community may not, for lack of a better term, be wiped out, and many people need to find housing in another place, it is very expensive. And so having these conversations now are really, it's eye-opening a little bit. It's not, we have probably scared you a little bit, and that's okay a little bit, but the main thing to know is that, we want you to just start having the conversations and knowing that there are resources afterwards to help you through the process. But really, like, what you can do now to mitigate your home will go such a long way for not having to have these headaches.
Can I add two
Of course.
comments in there too, based on what the fellow panel members have said. One thing that we didn't understand is that the additional living expenses, they start the day of the fire. So as you were both mentioning, oh, we're going to be nice, we're going to stay with family, we know we want to stretch this out, so we didn't actually push to get into a rental immediately. And then suddenly we were told, oh, well, you've already used up, because ours was time bound. So you've already used up a month of your additional living expenses, even though you haven't claimed anything yet. As we were thinking, oh, we'll push it out and start our clock ticking at a later date. So understanding things like that within your policy is important. We also looked at the public adjusters. I don't know if it's still this way, but they charge a percentage of what they recoup for you. So we had decided we would go forward and try to get as much as we could back. And then if we had, say, like the final 20% or 30% of our claim that we couldn't get, that then we would go in and try to hire someone to help us, because the cost associated with that would be lower, since all of our money, including our content, was going back into being able to do the rebuild.
Sorry. One thing I meant to say is also, so Joel specializes in insurance law for policyholders. It's really important to make that distinction, because there's a lot of expertise there. In many disasters that are caused perhaps by a utility, there's a whole nother layer of folks that come to town. And it's still important, if that happens, to make sure that you or somebody you hire are working your insurance claim, because there's a big gap between getting those dollars flowing from your insurance company and whatever may come later because of a utility lawsuit. So there's a lot, and I'm sure both of you can elaborate on that, but really knowing who you're hiring and what their expertise is important.
Eric, did you have anything to add on this one?
Lots of things, actually. So, going back to Joel, what he was saying earlier, so I want to talk about that a little bit. He talked about inventory. I actually had personal experience in 2015 with somebody's house that burned down, one of my relatives right here in Lawrenceburg. And so I've gone through that process. We lost the entire house, all the possessions, and had to rebuild from scratch. So I can tell you from firsthand experience that when you talk about inventory, the insurance company's going to work with you in trying to give you some time. They took a couple of years at least trying to put inventory together. In that particular case, it wasn't that important what the personal property was. But if you're concerned about your personal property, make sure you remember everything. It's really easy these days. Get your camera out. We've got a video camera. Everybody's got one of these, right? Do a video of, just walk around your house and do a quick video of everything that's stored in the cloud somewhere. Whatever the cloud storage is or offsite somewhere else. It's not important that it's accurate. And what's important is at the time that it might be needed after a fire, if you look at that video, then you'll remember everything else. It'll trigger all those memories. Oh yeah, yes, I had that, I missed that. Oh yeah. Just do that. That's a 10-minute thing to walk around the house and get that through it on the cloud. But Joel's right. The insurance companies, we're an independent agency. We represent many different companies, but on the other hand, I'm also a homeowner myself. I live just up the hill here, Christmas Street Hill, which is right in the middle of the fire area. So I'm in the WUI, and I've got to be very careful about where I live and making sure I have defensible space. So the insurance companies we deal with tend to work with numbers and algorithms I always say out of Omaha, Nebraska. They don't work for Marin County. They don't work for this area very well. And we spend a lot of time, we have in years, spent a lot of time struggling with our carriers to get the coverages up to where they need to be. So when we write a policy for someone, the software will say, well, it's worth X number of dollars. We'll say, no, it's got to be a lot more than that because we know the rebuilding cost of this, and this. So we put it in there for a higher amount. And then we have to fight with the underwriters to defend why we want a higher rate, the higher rebuilding cost of that. So I'm sure at the same time the claim's going to come through, they're going to come through the guy who's fresh out of college, as Joel says, who has the Omaha, Nebraska tools and say, okay, well, it's only going to cost us to rebuild your house. And you know it's not. And if anybody's done any remodeling work anywhere in their house, you know the cost of building and remodeling is just more than whatever you think it's worth. Okay? So there's a lot of truth to that. And what we do is we focus on trying to keep the coverages up there to where they should be for everybody. We do our best guess at it. What we often fight against are all the other agents. They could be independent agents, they could be a captive agent like the State Farm or Allstate, who underbid, who undercut. They'll come in and say, I can do it. Here's a $1,000 policy for your home. Here it is. And you don't know any better. You just sign on with that. But that person may have undervalued the home so low that you find out in the end you don't have what you think you have. And so you really got to read your policy to know that. So we can't compete against that. We're never going to be the low-cost leader to somebody who's going to come in $5 cheaper or $500 cheaper because they're undervaluing their home. Going back to the loss of use, policies are written one of two ways. You either have a time limit for loss of use or a dollar limit. And as Emily pointed out, the time limit was 24 months, now been extended to 36 months, which is great because what happened after Santa Rosa was at least 36 months before you get back in a house. So that's great. But if you have a dollar limit in there, that's the dollar limit you get. And Joel's right. We have to put you up in a like-kind place of living, but only to the limit of that dollar limit. That's it. When that dollar limit runs out, you're done, right? So you work through that. So take a look at your policy and see what it shows. Different companies have different ways of presenting that. When you get an inspection on your house, the insurance companies come through, as Joel said, they have, they have different ways of looking at insurable risks. And while the fire department comes through and they say, do this, this, and this, which are good things, you should do that, the insurance company may come through and say similar, but maybe a little bit different things. They have their own inspection team that comes through, and they're doing this. They're doing this everywhere right now. All the companies are doing this right now because they're going to look through on a granular level for every house, not just in Marin, but all over California, to see, is this a good insurable risk? Is this something that's going to be a problem? Is this house well taken care of? Is the roof in good shape? Is there debris around? Is there junk around the yard? Are the trees too close? What are the hazards here that make this not a good insurable risk? And they're looking very, very closely at that. True story, AAA is now running drones. They are running drones over houses. If you're a AAA client, they're going to run a drone over your house, and they find anything they don't like on your house, they will not renew you. And you have no recourse to fix it. AAA is absolutely about that. If they find something they don't like, they will not renew you, you're out. They can do that. They got drones to do that. And so we're getting calls every day from AAA customers who are getting canceled. So that's all I know about that.
How soon do they have to let you know?
At least 60 to 90 days. 69 days, right?
75 days.
Okay, 75 days.
75 days before your renewal date? Or
Yeah, before they'll cancel, yeah, before you're economic. Yeah, exactly. Even though, again, claims adjusters are going to have a different mindset from the company than you may have, and you may work with a public adjuster, I got to say, cooperation is a big thing too. Cooperate where you can, because we've gone through that road with people. Claims adjusters with whom you have a good relationship with, whether they're public adjusters or the company's adjusters, tend to be more giving in getting things done correctly. You can hit people over the head with a sledgehammer and get what you get, or you can work with them. And so I'm not trying to defend companies in that respect, but I know from personal experience over 30 years that I've talked to a lot of claims adjusters, and those who felt they were treated well by their clients, they did well by them and take care of the claims.
Great, thank you.
That's a nice thought. But here's the, there are good adjusters. Certainly are good ones who will want to help and they want to do the right thing. In my experience, they don't last that long in the business because the pressure on them is not to, they're monitored as to how much they're paying out. And the companies look at their loss ratios, how much they're paying compared to other people. And you're not rewarded for paying more money out on claims. So there's a pressure inside the companies to pay less. And so the typical dynamic is They're the expert. They do this every day. And your adjuster does this every single day in, day out. They know what they're doing, and they consider themselves the experts. When they're negotiating with you, you don't do it every day. Most of you will probably, have your probably never have a claim in your lifetime. But if you have one, it's the first time. So the negotiating dynamic, it's a negotiation. Make no mistake about it. You're negotiating with the insurance company. And when they come in and say they can rebuild the house for $350,000, and you know it's going to be $1 million, now you're negotiating. You need $1 million. But they're expecting to have a negotiation between $350,000 and $1 million, and they're hoping to end up maybe at $650,000 or $700,000. That'd be lovely. That's how it's set up. But that leaves you way short of what you need. So that's why I suggest you know what you're talking about. If you're the kind of personality who can stand up, fight back, and represent yourself, then do it. Many can. But if that's difficult or not your thing, or you're uncomfortable in that environment, recognize it, because public adjusters, for example, do it day in and day out also, and they're known. So all these people have relationships. The public adjusters see the insurance company adjusters in California, and they've had claims before, and they've had relationships, and so it's, who are you trying to kid? This is $1 million loss. You know it. I know it. Let's get there. And that's it's a different dynamic with a professional. You can load yourself up. You can go out and get 2 or 3 estimates, get an engineer, architect or engineer, put the plans together, have contractors bid the plans, and you've got to put some money into that. So you have to do that, and then you can get to a point where you have the evidence to represent yourself and fight back, and you'll have the better evidence with an architect behind you, maybe an engineer, a couple of contractors who have bid those. But that's few people will do that. Few people actually jump in and start to do that. But that's the kind of information you need to be able to push back on what the insurance company's going to give you.
We're talking about real costs to rebuild. It's one thing to rebuild one house in Marin today. It's another thing if 500 get destroyed and 500 have to be rebuilt at the same time. And those prices will probably quadruple. What's the relationship between what's specified in the homeowner's policy of X number of dollars per square foot to rebuild versus what it really costs when there's a regional catastrophe?
Yeah, well, it's interesting because they put language, if you read your policy, you'll see something called demand surge. It's a term meaning exactly what you're talking about. When there's an emergency, fire that takes out communities like in Paradise or Santa Rosa, there is this surge. The contractors aren't, there's only a few there. They're coming in from all over the place. They're bringing their workers in from all over the place. They're paying their workers a lot more money. And so the companies recognize, and it's in the policy. And they're telling you, when you read your policy, make sure you understand there's something called demand surge. And what you should do is actually insure well enough to handle that. Now, most insurance companies, most of your policies have a multiplier. So you're insured for, $750,000 or $1 million, and then the policy gives you another 25% or another 50% over that amount. And theoretically, that could cover something like the demand surge, but that only works if you actually insure the proper number in the first place, which very few, I can tell you, very few people are, Eric can tell you too, very few people are insured for the number they should have, and there's a lot of reasons for that, but some people work back to the number. Well, I got 150%, so I know it's $1 million to rebuild my house, I'll insure for $650, and then, loss happens, I'll have $1 million, and it'll all work out. You could do that. You probably will never need it. It probably will work. People save some money, but the better practice is to insure to the proper number to get your house built for, a given time, and then let the demand surge, be carried by the multiplier.
We're going to hold on questions for 1 minute. I want to just pose one more question. Emily, I know you had a follow-up on this, but I want to pose a question to Mark, just to bring it back to where we're at with the state right now. There is at the state level, the Assembly Committee on Insurance has a select committee on wildfire prevention. And on October 9th, so this is very recently, there was a committee meeting, Wildfire Insurance, Risk, Resiliency, and Recovery. one of the topics or one of the sections was titled "How Risky Are California Wildfires?" Not quite sure I needed that, but Mark was actually on it to testify under the section of how does California become resilient to wildfires. So I'd like you to speak a little bit about what this is all about, because I think we are looking at the fact that we do need the state to step up more in helping us, because putting the onus of responsibility on individual homeowners is really difficult. There's very few like Kate who are able to really work through this process and come out okay at the other end. I think many people end up leaving and not being able to rebuild or really recover. So speak to that, and then I just learned, and maybe some of you are aware, I'd like Mark to speak to the fact that some insurance companies now have their own fire departments or fire, there's a weird nodding heads here going on. So can you provide, if somebody came to me and said, we're covered, we have our own fire department.
I can cover the second part too, because I have a lot of experience with that. So the hearing that we testified at on October 9th was two committees of the Assembly of the State of California, the Assembly of Insurance, and so they're looking at the entire insurance issue, and then the Select Committee on Wildfire Prevention. They're working together because increasing the pace and scale of wildfire mitigation within the state of California is one of the key solutions to solving the insurance challenge in the state of California. However, there's still many challenges that exist beyond that. So the first part of the hearing was listening to two very knowledgeable individuals outlining the fire risk, but I don't know if we really needed to have that. I think everybody in the room understood the fire risk. That I was there to testify on a community level effort. We had a member from California Department of Insurance testify about some of the efforts that CDI is doing, specifically in regard to Commissioner Laur's recent Band-Aid. That doesn't really have much of a timeline to it or teeth. And then we also had a member from the Wildfire Defense Services, which is a private fire brigade that is employed by the insurance companies, and I'll touch on that later. And then the last panel, Amy Bach from United Policyholders was there. They had two consumer advocates and two insurance advocates. And it was interesting to see the four of them sit at the table together, mostly politely disagree with each other, and say that they are using the same exact data from the same exact source and come to completely opposite examples. That's the bad part of that portion of it. The good part is both the insurance industry and the consumer advocates know that it needs to be fixed. And so there is momentum that's being generated to fix that. And I hope and I have confidence that necessity is the mother invention. That's what I'm trying to say. And it's going to, things are going to collapse in California if we don't fix this insurance problem. If we can't insure homes, people can't sell homes. If you can't sell homes, then the mortgage companies are going to be left in a lurch with homes that have no value whatsoever. So unfortunately, you put the dollar signs behind it all, and it's going to motivate people to fix things. Private fire brigades. I am a State Farm customer, and they are one of the companies for properties that are in the WUI, and I'm in the WUI, have hired Wildfire Defense Services, which is a private fire brigade. Very large private fire brigade. And what I want to mention about private fire brigades is that there are industry standards that they must meet. So the firefighters that are coming off those engines are qualified firefighters. They do meet current firefighting standards. However, there's a big difference. They aren't public safety, and they may not be allowed into evacuation zones. So the way, and I've done this before I was with the MWPA, I was an operations section chief on a CAL Fire Incident Management team assigned to some of the largest fires in the state's history, including the Camp Fire, the Thomas Fire, the Sobranos Fire. I could go on for the fires that I was assigned to. And we work with these private fire brigades very closely. Once that fire has been going for a day or two, that's when that team is in place to manage this. You're not likely to see the private fire brigades arrive at the scene of a fire within the first 24 to 36 hours. They're just not structured to be there. So to characterize them as the fire department for an insurance company, during initial attack, as we call it, no. During major attack, when we have the structure that's in place, maybe. And the process is that, let's say, we'll make up numbers. There's 100 properties for that said insurance company within the threat zone of that fire. And they say, okay, we can send 5 fire engines. We'll send 10 of our fire engines to that. They have representatives that represents them. They come to one of our formal meetings, and they meet with a guy like me, who's the operations section chief. I was the person who developed the plan and led the plan for the fire. And they say, okay, here's our map. These are the communities where we would like to get in with our resources. And what they try to do is and I love this, they try to get there before the fire is going to get there. They're going to go through the property, and they're going to take mitigation efforts before the fire ever gets there. They're going to be limbing up trees, covering vents if they are at the 8th-inch screen, so on and so forth. Removing material, let's say you have leaves on in your gutters or in your eaves, they're going to be taking care of that. And then, thank you, they're going to also spray the property with foam, which helps resist ember attack and resist the radiant heat attack. So that's prior to the fire coming there. And depending on the relationship that they have, they may or may not be allowed to stay when the fire comes through. A lot of times they are allowed to stay there, they are trained firefighters, and they are allowed to suppress. However, it's not a guarantee.
And that's important because it's not a guarantee at all. If they do come in, it's something at the discretion of the insurance company to come in. What they're trying to do is protect their asset. They don't want to pay off on a burned down house. They want to protect the house so it doesn't burn. They don't have to pay for it. So they may come in or they may not. If they don't come in, that's it. It's not that you can't blame them for not coming. For whatever reason, they couldn't come in. Maybe they couldn't get access to the area. Maybe they didn't have the resources to do it. So it's something that's going to be in a lot of contracts. We see that with Travelers. The Travelers has that. Safeco has that as well. And it says in there that this Wildfire Defense Service now builds into the contract. This just came up in the last few years. And you must opt out of it if you don't want it. So people can't opt out of it. They want to. Why? I'm not sure why they want to, but they say, if you don't opt out of it, this is what we will attempt to do. But there's no guarantee we're going to do that. We're willing to let the service to be there.
And if I could add real quick, for when I had my other hat on and I was on an incident, I saw this as a force multiplier for me. Let's say it was this property here was the property that they were going to be working at, but I have properties surrounding that. And what the research is showing that radiant heat-wise, if we have homes that are closer than 30 feet from each other, the radiant heat can ignite that next home. And then you have ember broadcasts from the home that can ignite the next home. So if I can keep this home from being the home that's gets ignited, that does provide a level of protection for the surrounding home. So I always viewed it as a force multiplier as well.
Excuse me. Dale, you had a question. Let's go ahead and open up to questions. Dale has a question first.
I have a question.
Wait, Dale had one. Dale had a question before you. I'm going to go to Dale first.
You were talking about insuring for enough money on a home. After a panic like this, maybe 3 years ago, I called my insurance company, and they basically told me I couldn't insure for any more than I was already insured for. It's like they had a number picked, and it wasn't possible to increase that number.
I had the exact same experience with my insurance company. I knew we were underinsured. I knew it by hundreds of thousands of dollars. So USAA, I called them. I said, way underinsured. I want to pay for the right amount of coverage. Will you please come in and we just raise it up $500,000. I want $500,000 more in the house. They said no. I said, will you send somebody out to inspect the house? And they did. They sent a guy out. He came out. He's walking around the house. And he's looking. And I said, you mean? I said, it's way low, isn't it? He said, yeah. I said, you going to tell him tell USAA. He said, well, I have to use the Marshall-Swift index. That's all they'll let me use. So this is what's happening to you also. And so he puts it together. I said, well, what are you going to tell them? And he said, whatever Marshall-Swift comes up with. It wasn't very much more than I was already insured for. It's too low. So here's what you do. Because I wrote a letter, and I said, I'm underinsured. I tried to get insured to send a guy out, you still are underinsured. Here's the number I should be insured to. I wrote him a letter, and I said, I want to pay the additional premium to get this coverage. Please do it. I sent the letter off, and nothing ever happened, as I expected. But if the loss ever happens, and then I wrote a letter next year, said the same thing. You've renewed me. It's still too low. I need more coverage. And eventually I got a little more. I'm still not at the right number. There's 25% is in there, so okay. But yeah, I'm still underinsured in my house, and I can't get there. So letters to the underwriters, letters to your agent. If it's your agent will forward it on to the company. If you ever have the loss, you're going to come in and you're going to say, I'm sorry, you're underinsured. I tried to get the right coverage, and you have these letters that have gone out there saying, please insure me at the right amount. I don't know where that'll go, but as a lawyer in the litigation that might involve that, I think it's pretty good. And I think,
Eric
My
has thoughts.
answer is get a different company. If the company's not going to give it to you, go to a different company. And some company will give it to you.
Okay, well, so here's the other question. Do insurance companies value the loan? Does it make any difference if I've been with an insurance company for 10 years or 1 year at the time of the disaster?
Very little.
Okay, that's helpful.
Zero.
Another quick question.
And if your insurer tells you that you are fine, you tell them to put that in writing and send it to you.
Okay, that's good.
Because if they're telling you that you're covered and that they have assumed that, then they are basically holding themselves liable by putting it in writing.
Remember, every insurance policy is a 1-year contract. That's it. It's just a 1-year time period. When that year is over, it starts over a new insurance policy. So I get calls, I've been with this company for 30 years and I'm doing the contract. Well, it didn't matter if it's 30 years with that company. It doesn't matter. All they care is that 1 year, what happened at one time. That's all they care about.
Megan?
I have a question for Mr. Gumbiner. Mr. Brown said earlier that the defensible space database that's being assembled is secure and it would take permission of the homeowner for anybody to look at that. If there was a claim in litigation, could the insurance company subpoena that database and review that information?
Anybody can subpoena anything in litigation, so the answer is yes, but I don't think it would be all that relevant to any litigation. If it's insurance litigation, you got the policy, you had the loss. If it's a covered loss, they owe the proper amount. Whether it could have been defended or wasn't defended properly or shouldn't have burned, none of that matters in insurance. Whatever the loss is, if you've got fire coverage, you've got fire damage, you're entitled to be paid to repair the fire damage.
And my experience has been that the insurance company can claim negligence on the part of the homeowner and disallow the claim. And in the database, the defensible space database, there are errors. I'm not the only one here in this audience that have errors in the report, really grievous errors. And I spent 4 months and many letters, and the errors are not corrected. In fact, none of the communications have been acknowledged.
So I know Director Brown is going to follow up with you directly. I want to make sure we have enough time to get to some other questions. Yes, please.
Emily mentioned something about non-admitted insurance companies. Non-admitted to what?
Good question. So sometimes they're called surplus loss carriers. They're basically insurance companies that are not backed up by this this state guarantee fund. Thank you. So if a non-admitted carrier goes under, there's no backstop there. You can elaborate on it. It's complicated.
Is non-admitted synonymous with second rate or unreliable?
No, not necessarily, but you do want to check their financial ratings.
Name a company.
AIG, right?
Yeah, Lloyd's of London is most common. You hear Lloyd's of
Yeah.
London right there. So admitted carriers are going to be very standardized in all their contracts across the board. There'll be some bells and whistles, but basic contract is standardized. Surplus lines was not admitted carriers, and as Emily said, are not backed up by the California Insurance Guarantee Fund. So if they go insolvent, they won't have the money back to pay the claim. That's number one. Number two, they tend to have more a la carte features that you can take on, they can put on or take off coverages more easily than you can with an admitted carrier. Admitted carrier is pretty locked in.
So they're riskier.
Not necessarily, you have to know what you're buying. Well, you gotta know what you're buying. And you don't go to surplus lines unless you can't get it admitted. You only go to surplus lines if you cannot get it admitted.
And usually, like a single policyholder cannot just like go to the non-admitted market, buy something. You do have to work with a professional, with an insurance broker to get that. So that's the professional that would tell you, well, none of these insurance companies in the traditional name brand market are going to insure you. I can get you a quote from these. This is one option, or the fair plan if that doesn't work.
Thank you.
Yes.
So in today's insurance environment in California, I have fear of reaching out to them to see, just even reaching out to see about raising, am I underinsured, can I raise it, or accepting an unsolicited offer to pay an incremental amount to raise it, just because I don't want to overbear and potentially get dropped. And is that fear founded, unfounded? Because
I have the same question because I was wondering with all the number of residents right now, hopefully, building ADUs and doing additional work on their homes, do you reach out to your insurance and what do you do? And is it
and even outside of Wildfire, like I've made improvements to plumbing or electrical in my home, and normally I would, in a normally functioning market, I would reach out to them and tell them that, whether or not it results in a discount. But I don't even want to approach that just because I don't want to. Is that founded, unfounded? Is it?
Yeah, who would like to take that?
Yeah, if you're making improvements to your home or putting an additional dwelling unit in or something large, you've got to tell your carrier. There probably is a provision in your policy that says if you've increased the value of your home by more than 5% or spent more than 5% of the value on it, if you don't tell them, you may have voided your coverage or done damage to your coverage. So it may be a condition in the policy. It's just a really good idea for any remodel, large remodel, or addition in particular. It's a really good idea to tell your agent, tell your broker, and make sure that that's somewhere in the file. It's noted that you've done that. You want a record of that. So do it. Don't just do it by phone. Send an email or a letter to your agent or broker.
So I'm going to emphasize that because the carriers are changing now. What they're doing in the last few years is getting much more granular. Many of you may have received some kind of email or letter in the mail from your carrier, insurance company, asking you details about your house. Anybody's ever received one of those? If you haven't, you're going to. It's going to ask you, when was the last time you updated your electrical? When was the last time you updated your plumbing? They want to know the years of updates of these things because the information they have in their files is probably old and it's looking more granularly about how insurable your house is. They want to know how all these little details about the last time you updated these things. And they do give discounts. Travelers, for instance, the younger the roof is, the cheaper the insurance rate is. Okay, so as the roof gets older, the rate goes up because older roofs leak, of course, right? So if you do update these things, let your carrier, let your insurance agent know that there could be some discounts involved. And nothing else. Like you say, well, always put it in writing. Don't just call them. Put it in writing. Say, hey, by the way, I did this. I put solar panels in. I remodeled my bathroom. I did whatever. Put it on file so that they know, and it's going to be there in case a claim happens, or to make sure when you have the next discussion, if your coverage for the house is higher enough, you have it there.
So you could also try calling a few different carriers and getting quotes from them before you called your own. So you could call other carriers, get quotes for your whole package, see if they would insure you, and then go back and compare it to your own, and call your own and see how that measured up.
So I like that suggestion. I guess to again put it back, it's like, is there any risk in like, is there actually any negative outcome of me informing?
People call us all the time with updates.
Okay.
And we update our policies.
I can give you
Not
one.
like, oops, now we're going to cancel you because
I can give you a one-off experience of having a house where that in a subdivision where a fire did go through, did destroy homes in my subdivision. I did have a one-on-one conversation with my insurance agent multiple times, and I'm still being renewed.
And keep in mind, causation doesn't always equal correlation, or correlation doesn't equal causation. And so you just kind of have to do the best you can. You can always, if the price is going too high, you want to call your agent and see if you can raise your deductible. That's one way where your annual premiums would go down if you want them to. And then also it will prevent you from filing small claims. Like you wouldn't file a claim, keep your deductible at $5,000, maybe even more, you won't be tempted to file a claim. It's really the claims on your record that will put you into a category of being dropped next year. That's a big factor.
Question?
So I might have the terminology incorrect, but I wonder if somebody can comment on the recent California legislation which allows insurance companies to do future analytic modeling about fire danger. It seems, if I understand this new thing, it means that rates are going to go up and cancellations are going to go up. Am I not understanding it?
Who wants to, Mark, we just talked about this one this evening. You want to?
Sure, and I've had a crash course lesson in this. So catastrophic risk modeling, CAT modeling. Currently, Proposition 103 says that rate settings must be transparent. CAT risk modeling uses algorithms that proprietary companies will not show you how those models work. Therefore, it does not line up with Prop 103. The fact of the matter is, insurance companies are using CAT risk modeling. They are using it to determine whether or not they are going to insure you, but they're not using it to set the rates. And the reinsurance companies who insure the insurance companies are using CAT risk modeling. So it's almost one of those things where it's being used. Can we find a middle ground? In most places where CAT risk, and Emily will back me up on this, but in most states where CAT risk modeling has been used, yes, rates have increased. However, in California, and I could be totally wrong about this, but I think we're about to see a massive rate increase without the CAT risk modeling. And that's because it's a backwards looking system. So all the years that we did not have tremendous fire loss are going to fall off the averaging table. And we are just going to have high loss years on the averaging table. So the optimist in me says that CAT risk modeling can take into account community level efforts. So when we show that our residents are decreasing the home ignition probability of their home, and that all their neighbors did that we've improved our evacuation routes, that we've created community buffers around the community. The research from Milliman, which is a CAT risk modeler, says that if you can get 30% of your community on the rim of the wildland urban interface boundary, and you create these community buffers, that you can actually decrease the average annual loss by 70%. That's what speaks to the insurance companies. So to me, that's the optimist side of the CAT risk modeling. The pragmatic side is the insurance companies are already using it. And so I'm of the mind that we got to find a way that we can use it for setting rates in a way that aligns with Prop 103. Don't wipe out Prop 103, but find a way that CAT risk modeling is transparent.
So I want to just add one more thing. They are using it, but because they can't change rates, because the rates are regulated by the CDI, they're just not insured. You just don't get insurance. So either you get insurance or you don't. If you're going to use CAT risk modeling, you don't get insurance because they can't charge the rate they want.
And interestingly for us, we were brokered out to a small insurer when we originally bought the house. Once we rebuilt, we were very worried about being able to be reinsured again. However, the algorithms had told the big insurers there was nothing else there to burn, and so we were now moved back into the regular insurer market.
All right. Oh, okay.
I have a question about one of the comments where you can take the money from insurance and you can forget about rebuilding, you can take that money and buy a new house someplace that doesn't have like a fire risk perhaps. But that sounds a lot like you sold your house. Is there a tax implication there? You bought our house a long time ago, and so there's a potential capital gain if that take the money to the burned down house and buy something new. That is determined as capital gain.
Did everyone hear that question? It was about, Emily had mentioned that if you collect the money, you lose your home, you collect the money from the insurance, you could actually move with that, with the money that you've received now, move away and move out to a different area. And the question has to do with, do you have a tax implication and a capital gain on that, on those funds?
Not on the, as far as I know, not on the insurance money, because you're essentially choosing to, instead of rebuild, you're replacing it. So just like you don't have to pay taxes on the money you receive to then pay your contractors to rebuild a home, you're not keeping the money and going to Vegas, right? You're spending it to buy elsewhere. But that being said, the property taxes on a new home might be more than the property taxes on your current home, right? So there are always increases in that situation.
And if you have an existing mortgage, you still have to pay that off.
That is true. That is true.
All right, I'm going to try to end on an up note. It's a little hard. So for our area with the Central Marin Neighborhood Response Group, we've all been about emergency preparedness. And I think what we're hearing tonight, there's insurance preparedness. And really the best thing we can do is, if you're a homeowner, recognize we have a responsibility to understand what our policy says, recognizing we live in a very risky area that is known by the state, it's known by the insurance agencies. There are a number of resources available through United Policyholders, insurance agents, attorneys, Marin Wildfire Prevention Authority, which is working really closely at the state level, and Kate's talking about from a personal experience. There's a lot of work that's involved, but I think that the best thing that we can do, and I so appreciate everyone coming out tonight, and you guys are all so passionate about this. It's great, thank you. And there have been, the questions have been great, it has been recorded. We will be sending the recording out. Please share it with others in your area and your friends, because I think this is really important information. Joel, you have final thoughts?
Yeah, I'm kind of going back to where we started. There are a couple things that everybody should do, really easy things to do that will avoid big problems later on. I've seen some easily avoidable things. One is we should all make sure that the name on the policy, name or names on the policy match the name of the title owner of the property. So it's, you know, I've got a case going to trial in a couple of months because the adult son called and got the policy and nobody asked if there were other owners. And he owns the property with his adult parents. And he owns 25%, they own 75%. Insurance company said, we only insure you. We'll pay your 25% of the loss. And it's big time litigation. It's so easily avoidable. So if you, it's not such a big deal, husband and wife, because you're covered. But if there's multiple owners of the property, make sure everybody is on the policy, everybody's insured. If it's owned by a trust, the trustee should be insured. Not so important for the beneficiary, but the trustee should be named insured on the policy. So just check your policy. So people die and they leave the deceased name on the policy. Not a good idea. You know, update the policy, make sure you call Eric, your agent, your broker, and get it right. So it's just as important as getting the amount of coverage right. Eric's idea with filming everything in the house, opening the drawers, opening the closets, and having that available. Check your contents limits. You know, you may be careful. It's usually the contents limits are just a percentage of the dwelling limits. Different companies from 50% or 40%. You may have nicer things, or you may have some expensive items. It won't cost you that much more to change your policy limits for contents from 300,000 to 500,000. and you probably need that, so not a big ticket item. And as already mentioned, the additional living expenses or loss of use coverage, look and see whether you've got a time or whether you have an amount, and think about the rental value of your house and how long, what it might cost to rent your house for 3 years. If you're out for 3 years and you need the coverage. Because if it's $5,000 a month or $10,000 a month rental value, that's maybe $100,000 a year. You may need $300,000 or $400,000 of additional living expense coverage. And Eric, I don't think that'll cost you that much more to increase that. So those are simple things you can do without having to read your whole policy, just to check and kind of safety check your policy and make sure it's what you want. To get a contractor to give you some estimate of what it might cost to rebuild your house now, even if you get pushback like I did with my company, it's a good thing to do. Hire a consultant. He or she can come out and give you a ballpark number of what it would cost to build your house, and then you have a number in mind, and you can shoot for that with your coverage. Easy things.
All right. Thank you for coming. Thank you to everyone, to Joel and Mark and Eric and Kate and Emily. Really appreciate you coming out. Thank you for recording this evening. And I think you'll be able to stay around for a few minutes while we clean up. And if there's other questions, please come on up. All right.